Welcome everybody to another episode of Real Estate Insights. I'm your host, Jarett Richards. Today we have another very special guest, Christian Walsh with Wire Associates. Christian, can you go ahead and give us a little bit of an introduction and a background to who you are and what you do?
Sure. How long do I have? 30 or 40 minutes?
You have an hour. Take as long as you want. You guys have to sit through the whole entire thing, take notes, be ready for it. There's a quiz at the end too.
I appreciate you having me on. So I've been a licensed broker now for 16 years. Started out in much more interesting times, although it's all coming back full circle to be interesting times again. Licensed broker that focuses on investment properties, so smaller multifamily, and landlord-tenant occupied properties, and then single family, so first-time home buyers, regular sellers. And I have a YouTube channel, and I've actually had this guy on my YouTube channel. Yes. He did an amazing job.
And the celebrity, Jane Rose, the one that people really care about, but appreciate you having us on, so yeah, thank you.
Exactly.
And I'll put that link in the description too, so you guys can go check that out. And I'm also going to put his channel, your channel, so go subscribe. Bunch of really good content.
Thank you. Yeah, so that channel we talk about market updates and landlord-tenant law, Prop 19, things like that. But you're going to get a lot of great stuff from this guy right here.
Yes, and that's what I'm hoping to do. So with that said, let's go ahead and hop into today's topic. We're going to be discussing what is going on in the market of Orange County and how does this affect investors. So Christian, what is the biggest thing that you're noticing right now that investors are concerned about? And at the same time, where do you see opportunity in the market?
Great question. Huge question. We will need a full hour to go into all that. But no, honestly, the big thing right now is the inflation is hitting everybody. Inflation is hitting property owners. So let's go ahead and by investor we mean somebody who owns multifamily buildings or wants to buy multifamily buildings. And you even need to break that into two categories because you have the 1 to 4 or 5 plus. And the difference there is 1 to 4 is going to be conventional financing, which we're going to circle back on that. And then the 5 plus is going to be commercial financing.
Because 1 to 4 units is still considered technically a residential investment purchase,
correct,
if I'm not mistaken. Correct. And above 4 or 5 plus is going to put you into commercial, which is the different animal, fairly similar, or completely different?
Well, the financing is different in that the property matters more. So the income coming from the property matters more for commercial financing versus the investor. They have to have experience. But the 1 to 4, it's all about the investor themselves, their credit, their income. That's what matters. And then the down payments are different. But the biggest difference would be the fact that you can do fixed rate financing for 1 to 4, but you have adjustable rate financing for 5 plus.
Gotcha.
So let's flesh that out for a minute. So if you're buying property right now in the 1 to 4 range or even the 5 plus range, the big challenge you have right now are interest rates.
Yes.
Making it very tough to pencil, making it tough to cash flow. So cash flow, which a lot of people misuse, cash flow is actually you take all the income a property generates, so that's rent, a laundry room, parking spaces, garages, etc. Add that all up together, subtract the expenses, not the mortgage. Leave the mortgage aside. Subtract the expenses, so expenses would be utilities, which have gone up, insurance, which has gone up. You technically have a vacancy factor, which means you have to factor in that there may be an empty unit periodically. You have to have a maintenance, those costs have gone up. So all those costs, which are going up and making it tough for investors, those are subtracted from the income. Then you factor in the expense for the mortgage. That's subtracted off of that. What's left over is your cash flow. So in some cases, right now, by the time you put a mortgage on it, unless you put 50 to 60% down, you're not going to cash flow.
Yeah.
So 1 to 4, fixed rate financing is great if you locked in 2 or 3. 5 plus is great if you locked in 2 or 3, except for the fact that 5 plus is going to reset.
And so to confirm, there's never an option to do a fixed rate in commercial on 5 plus. It's always going to be the adjustable.
Correct.
Is that why also commercial is getting hit so hard right now too?
Exactly.
Gotcha.
So all commercial, so office, industrial, multifamily, that's all adjustable rate financing for the most part, unless, I mean, you could theoretically, if you got private financing from the seller, things like that, but that's rare. So everybody's going to have their mortgage resetting, and what's interesting in the 5 plus world, it resets and there's no cap on the reset. when you get an adjustable rate mortgage for 1 to 4, there's a cap on the reset.
Okay.
So it could typically go up. It could be 1 to 2% as that first adjustable rate adjustment. On commercial, there's no cap. So they literally could go from 3 to 8, 9, or 10.
What determines when it skyrockets like that?
So
it's essentially a bunch of factors, of course, but is there any main one factor?
It's basically the term of the loan. So it's a
Gotcha.
3, 5, 7, 10. Majority of commercial loans would be 7 or 10 year adjustable rate. So it's fixed for 7 to 10, and then it resets, and that's based on the prevailing rate at the time it resets. So that's where you get in trouble. So you've got all the costs have gone up, rents have gone up if you've increased your rents, and then you've got an adjustable rate mortgage. If you own the property, you're in trouble, or if you're trying to acquire a property, you can't get cash flow. So that's a big thing right now, is the increase in expenses and the increase in the mortgage rate.
If you're an investor out there, and let's say you don't have the option to go and buy 1 to 4 units, essentially in all cash, you have to use financing, and you know that you're essentially not going to be cash flowing in the first year, is there a certain time frame that you look at to essentially be okay as an investor, new investor, savvy investor, where you're not going to cash flow and you're okay with that because in X amount of years you know that you're going to essentially start cash flowing?
That is a great question. A negative cash flow is always dangerous, in my opinion. There are mitigating factors, because what we've discussed with cash flow is pre-tax, so there could be after-tax reasons where a negative cash flow would work for someone. So it could work. And to your point, we're in a market where it's a higher appreciation market. That's why properties trade at lower cap rates. They trade at a lower cap rate, used to be a 3 or a 4. Now they're getting up to 5 or 6. But they're trading at those lower cap rates because we're in a market where appreciation in value and rents is solid.
Gotcha.
So you could theoretically have a negative cash flow now and be fine in 5, 7, 10 years with a fixed rate mortgage. Although maybe an adjustable rate will go down by then, but that's a whole other math. But you have to have a long-term holding pattern, and then you got to figure out, well, why? What's the goal? Why do I want this property if it's a negative cash flow property and isn't potentially going to cash flow positive until year 5?
Yeah.
And then you have to really run your numbers tight, because if anything goes wrong, like you need a new roof, that's going to kill you. That capital expenditure like that could kill you. So.
Gotcha. And so where do you see the best opportunity right now in the market then?
Yeah, so great question. So opportunity in this market, there's going to be opportunity in every market. Like right now, prime example of opportunity, you will see in the news that office buildings are trading, in some cases, 50 cents on the dollar for when they acquired them. But let's talk about multifamily. So there could still be opportunities there. For example, I just did a market update on last night, and the Orange County multifamily market, I saw a huge uptick of new listings, and demand had dropped. So there does appear right now to be an opportunity in Orange County where if you find a seller who needs to sell, there's plenty of inventory, so maybe you could come in and give them a lower offer than you maybe would have had to do 6 months ago. So you really, long story short, is you need to know what you want in an investment, analyze the market through that lens, and then look for opportunity when it comes. But there is opportunity in every market, but it's also hard to find opportunity in just about every market.
Yes.
Meaning you've got to really dive in and know what you're getting into.
Absolutely.
So, another big challenge for investors right now is keeping up with the changes in legislation.
Okay.
Huge. Well, so AB 1482, this is multifamily rentals. That's the Tenant Protection Act of 2019. It went in place, started in July of 2020 while we were in the pandemic. Tons of landlords still don't know about it. That's some of my most popular content. And what it does is it puts rent caps on increases for properties, and then it also changes the reasons that you can ask a tenant to leave. Okay. So that legislation has already been in place for 3 years, and most people still don't know about it. And by most people, I mean landlords and tenants. They're still learning about it too. So keeping up with the legislation, and don't assume that because you have a property manager that they're doing it and they know, because I know plenty of property managers that are not, and nor agents. Like, you do a great job of learning what you need to know as an agent.
I appreciate that.
And you're one of the few, quite frankly. They don't take the time. So where I get a lot of phone calls from my YouTube channel, it's to fix a problem that a property manager or somebody who's doing it themselves, a landlord doing it themselves, or working with an agent who's doing it wrong. They want me to fix it. Sometimes I can, sometimes I can't.
For all of your problems, give this man a call.
Well, we were talking about it. That's what real estate is, real estate sales, and I think it's important to share this.
Yeah.
It's solving problems for people. And that's what Jarett has based his business on. I based mine on that. We're here to help solve problems. Sometimes you don't get paid doing that, but that's okay.
And that's, I mean, I literally just before this call, video, had a call with the clients, and he called me. He's like, "Hey, are you okay with helping with the lease?" Like, yes,
yeah,
I'm more than happy to help.
You'll get paid on it.
And then he was like, "What if I find one that's not on the MLS, meaning that it's for sale or for rent by owner, right? I'm okay with that." I told him, "I don't care if that's going toward. I'll help you. I'll help do everything I can, and help the family down in Irvine." And I think that's the only way to really do the business, and something that I like studying success, and this man has built a great career and by those same exact values, so proof is in the pudding on that one. So
I appreciate it. So, and there's other stuff that's changed. So Prop 19 is another thing that changed. So that changed Prop 6090, and what that boils down to is when somebody inherits a property now, they used to inherit the property tax basis that the previous owner had. So if you inherited an entire portfolio of shopping malls and gas stations and real estate, if you inherited that from your parents, you would keep their property tax basis. So we got these crazy situations where people have property worth literally tens of millions of dollars and they're paying like a couple grand in property taxes across generations. Well, Prop 19 changed that. Some people are angry about it. I get it. Some people understand why it needed to be changed. It doesn't matter where you fall. It's the law right now. It's being contested. We'll see what happens with that. But that's another example. You need to keep up with that. Talk to your financial advisor. Talk to a good agent like you or me, and plan accordingly. If you have a multifamily asset or a gas station or a shopping, whatever it is, they're not going to be able to inherit the property tax basis that you have. The problem with that is if you haven't increased your rents, and sure, you're cash flowing when your property taxes are $1,500 or $2,000, but if it resets to $20,000 and the property's not going to cash flow anymore, you need to plan ahead for your heirs on that property. And of course, you can be angry about the law. I get that. I understand where you're coming from, but it's the law. So let's figure out a way to plan for it.
Absolutely.
That's part of what's going on in California and the U.S. Like, regulations are changing particularly for multifamily and landlords. So you got to stay up on this stuff.
Yeah, and to kind of dive into Prop 19, for those who don't completely understand what Prop 19 is, can you kind of explain exactly how it works from the investment standpoint?
Yeah.
And then also, if I'm not mistaken, if a family, let's say mom, dad, pass or essentially inherits, a property is inherited by a grandkid or something like that, if they make that their primary residence, is the tax base still the same or is it adjusted?
Yeah, great question. So there's actually three components. There's two components that matter to folks, and it was all in the legislation when they wrote it. If you voted yes or no, theoretically you knew what you're voting on. Yeah. But so Prop 19 is broken down into transferring your property tax basis on your what's known as your family home or your primary residence, and that's if you're still alive. You're not doing an intergenerational transfer. So the first part of it is if you are selling your primary residence and moving to another primary residence, and it can be sold anywhere in California and you can buy anywhere else in California, you're going to be able to bring your property tax basis with you on that new property. There's no cap on that for transferring your property tax basis. The only thing that happens, there's some math involved. If you sell for $5 million and you buy for 10, there's some math involved, and we can go through it in a later video, but basically you'll carry over your low tax basis for that next property plus a little bit extra. If you sell for 5 and buy for 5 or 4, you're going to bring your property tax basis from this property. You can do that 3 times, even if you did it before under Prop 6090. One major change it made, Prop 6090, Prop 60 only had, I believe, 10 counties in California that allowed you to transfer your property tax basis. Then Prop 90 was if there were a few that had relationships, so you could go OC to LA, LA to OC. Prop 19 changed that. Every county, all 58, doesn't matter where you're going, where you're coming from. So that was a big change too.
And it's residential, commercial as well, correct?
So, next part. So that is only for your home, your primary residence. So you can't transfer your property tax basis for investment property through that. Now let's talk about transferring your property taxes in an intergenerational transfer. So for example, you die or your parents want to give you a home. I would love that. Probably not going to happen. It's going to happen to you, I don't know. So intergenerational property transfer most often happens when someone dies. So in that case, as long as the primary residence property tax basis will stay the same if any family member moves into that and uses it as their primary residence. So if you have 4 kids, just 1 kid has to move in. Now there is an exclusion an exclusion isn't the right word, but it's like an adjustment of $1 million. And it gets complicated and I need a whiteboard to show you. But let's say the house was worth $500 when they bought it, and the property taxes are based on that $500,000. Then it's now worth $1.5 million. You get $1 million essentially where it's not adjusted. So your property tax, as long as it's worth $1.5 million or less, your property taxes will stay the same. Yeah. So I know it's complicated, but what it doesn't work for intergenerational property tax transfers is it does not work for commercial properties at all. So those are all reassessed.
Because it can't be a primary residence, correct?
Yeah, you can't say a shopping mall is your primary residence. So the other important thing to understand, and I've said it multiple times, but it's important to understand, this is only for property tax. Income tax, capital gains, that's a separate story, and there's separate topics we can talk about with that, not now, but because this video would be 6 hours. But Prop 19 has changed property taxes. And who knows if it gets changed, if it gets knocked out of the way, something new comes, who knows. But the point is, real estate professionals like us, or you can turn to us for help to ask. We'll point you in the right direction, help you ask the right questions of your CPA and the Board of Equalization.
Absolutely, and that's one of the things that I wanted to touch on, because I've had this conversation with a few people, past clients and even friends and family members, where it's like, hey, I don't care if you guys aren't looking to buy, like, contact us, we're here to help. So if you guys have any questions, don't ever hesitate to contact a trusted agent and kind of ask and get their insights and get updated on some of these things, because it's important to know at the end of the day.
Yeah, and we can't give tax or legal advice.
Correct.
You and I talk about this, but we can give you the questions to ask the attorney, the CPA, because we know enough about it to help you figure out your situation so you can ask the right questions of the appropriate professional.
Absolutely. Well, Christian, thank you so much for taking the time to be on our Real Estate Insights. If you guys have any questions at all regarding real estate, whether that's an investment property, maybe you're looking to buy your first home, or whether you're just looking to get updated on current, information about real estate, go ahead and contact either one of us. I'm going to put Christian's YouTube channel in the description. I'm also going to have it pop up right here, so make sure you go subscribe to his channel.
And you absolutely do not want to miss the next episode of Jarett's Show.
See you then.